In this video, I'm going to be sharing with you guys 3 ways and tips that helped me overcome losses. And obviously this isn't going to be one of those videos where I tell you if you do these 3 things, you will never lose again. That is not this. In this video, I can't wait to discuss things that I used to do and I have now overcome these things, and it's helped me in a drastic way. It's helped improve me as a trader in many, many ways. And I'm grateful and I'm excited to share this video with you. So without further ado, let's jump into the video. The first thing that is adding more losses to your arsenal is FOMO. Okay, so FOMO, for anyone who doesn't know, is fear of missing out. So this can happen in many ways, right? Say you see a setup coming into your area, say you see price coming into an area that you want to start to look for longs or shorts from. Instead of looking for your criteria, or instead of letting every box get checked off before you enter the trade, you just enter the trade because you don't want to miss it, right? You have a fear of missing out. You have a fear of the market coming into your area and just leaving without you. When that happens, you then are breaking your rules. You're then entering prematurely, and a lot of times that trade is going to lose. If you're watching this video right now, how many times have you taken a trade that you know isn't to your plan, and right away, the second you press market execute or the second you are tagged into that trade, you know it's going to be a loser? And it's almost like God or the universe is like, here you go, you broke your rules, you're going to lose. The worst thing that can happen is when you do these things, you act with FOMO and you win, because then you go and replicate that. You go think, oh, maybe I don't need my plan, or oh, this or that. This used to happen to me all the time, because for a while I used to use limit orders a lot. I've been using market executions a lot now, but this used to happen to me all the time. Whenever I would get missed on a trade, or say I would get swerved or something, that next trade that I would take, I would just be like, oh, to prevent me from missing this trade, I'm just going to enter when it gets in here. And it's a very, very vicious cycle. And this is something that I know a lot of you traders deal with. If you do, please drop a like on this video and let me know that you also are not alone. I'm here with you because yeah, FOMO is a big thing. And another thing that relates under FOMO is, say you miss a trade, or you see someone on social media in that trade that you were looking to get in. You'll then look for the next opportunity to enter that trade, even though it's way away from where you would have got in before. You want to feel involved. You want to be like the other person that you're seeing is in the trade. So then you enter late. So now you didn't enter prematurely, but you're entering late when the move is already done. A lot of the time this ends up in you losing, right? This ends up resulting in a loss because the move has already happened and you're trying to catch the tail end because you've seen someone on Twitter or you saw someone on social media that has been in this trade, and maybe you want to be like them, or maybe you don't like them. That's a common thing, and you want to get involved, right? So FOMO has 2 things: entering prematurely and then entering at the end of the move, right? We don't want to be entering at the end of the move. We want to enter when the move is about to happen, and then we want to enter. You can enter a scale and opportunity when price pulls back to your entry to give you another one. Okay, so that is number 1, guys. FOMO, early premature entries and late entries. Okay, stick to you. Who cares what people on social media are doing when you're trading? You shouldn't be looking at that when you're trading anyway. Close the damn apps and just focus on your trading session. Let's jump in to point number 2. All right, guys, point number 2, this thing is massive. This thing alone has saved me from taking so many losses, it isn't even funny. And that is, you are not waiting for a liquidity grab before you were looking to get into the market. And this kind of backpacks off of the FOMO part. This backpacks off of the first point, because when you are entering with FOMO, you're not caring what's happening. You're not waiting if there's a stop hunt. And for a lot of you, you may be totally new to this and not understand what I mean. So if you go back and look at your losses, study them, and see if the common trade is you're entering too early. I get messages all the time about people who say they seem to enter too early, the market will take them out, and then it'll go in their favorite direction. And this is because this happens. This happens all the time. And it's something that I actually wait for. If I don't see a liquidity grab, if I don't see a stop hunt or a stop raid, whatever you want to call it, I will not get in that trade because I know it is most likely going to happen. And if you don't see an inducement, if you don't see price inducing early buyers or sellers, then most likely you are that inducement, you are that liquidity, right? That's something I love to say. And it really helps keep me accountable because I need something to be obvious. I need to see price build up. I need to see a liquidity run on the stop losses, take out early people, and then the market break structure, I know that, okay, most likely now the move is about to happen because we have tricked people. We have taken people out of the market. And trading is a zero-sum game. So when someone's winning, someone's losing, it's going to clear out liquidity to provide liquidity for the move up, and then it's going to go, right? Or vice versa if you're in short, right? So wait for this. And I promise you, this can backpack off the FOMO thing because you're having patience. I promise you, if you are already doing this, you know exactly what I'm talking about, and you can probably relate to this too. Drop a comment if you wait for liquidity sweeps and it has helped you trading a lot. I would love to know because that's something that helped me like crazy. But if you're not, I promise you're not going to miss the move. And if you are, it's very, very few and far between that's going to happen. Okay? Just wait for that liquidity run, whether you're shorting or longing, and then look to get involved. I promise you it's going to save you from so many losses. Okay? I promise. And by doing this, mixed with the first thing, you're not only going to improve your trading results by taking less trades, but you're going to improve your patience muscle. And I've talked about this a while ago. For anyone who's new to my channel, I talk about patience pays, and patience is a muscle you need to build, like at the gym, right? It's something you need to work on, right? You're not going to just get on the charts and be patient. And people ask me all the time, Mac, how are you so patient? How are you okay with waiting? How are you okay with waiting? Blah, 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 blah. It's because I waited. It's because I took weeks where I would just watch price and build that patience muscle. And it has helped me so much. And another thing to just quickly add before we move into the third point is what changed for me, what helped me with trading isn't thinking I need to win more trades. It's how do I prevent more losses from happening? And I don't mean losses to plan. You can't prevent those from happening. I mean, how do I prevent the losses that aren't to plan? How do I prevent the losses that have FOMO? How do I prevent the losses where I'm entering too early? Stuff like that. By removing losses, in my opinion, that is how you become a better trader. And I don't mean remove them entirely. I mean remove the silly losses. Because in my opinion, when I focus on losing less and taking the highest probable setups that check every box, I'm not entering FOMO, I'm waiting for liquidity and all the other entry criteria that I have, then I know that I'm setting myself up to have the highest probable trade that I possibly can. And that's all we can do as traders, right? That's all we can do at the end of the day. So before you go, oh my God, he's saying not to lose. No, I'm saying eliminate the low probable trades, eliminate the crappy losses, because then it sets you up for the better trades. The better trades then end up working more in your favor than the crappy ones, right? So it's just like a snowball effect, right? When you're eliminating the things that you do wrong, things that you do right are going to shine. Okay, and that's kind of the point. That's kind of what I wanted to backpack onto that second point. And now let's jump into the third one. This one is huge for me, huge. And I actually acted on this on Thursday, and I will go into greater detail on that in a second. So the third one is not having an exit plan. And this is massive because for the longest time in my trading, when I would set a trade or I would enter a trade, limit, market execution, whatever it was, I was either winning that trade at full TP or I was losing that trade. There was no in between. And I would lose so many trades that were winners, right? Trades that started out very, very nicely that would come back and take me out. And the thing is, I thought I was doing the right thing because I'm letting it hit full TP. But at the end of the day, our job as traders is to analyze the market. Our job as traders is to analyze when things aren't valid anymore. Okay, so what I mean by this is you need to have an exit plan or a risk mitigation plan for when what you want to happen doesn't happen. Okay, so what I mean by this is if I'm looking for a short, okay, so I'm in a short looking to take price back down. In order for price to come down, it has to break key levels, of demand, okay? So if you're in a short position and we're coming into an area that it has to break and price doesn't break, your trade is most likely invalid. My trade is most likely invalid. So what I do when this happens now is I remove risk when we get to those key areas that are away from my entry. Because if we break the trade, my trade is valid. If we fail to break, most likely I'm going to get taken out of my position. Sure, there may be times where it can come up and fiddle around your break-even point and then drop, but from my own data, more times than not, it is coming back to take me out. And hey, if it does do the first option I said where it'll come back down, then you can look for another scale and opportunity once structure breaks again. But this has helped me a lot. Obviously, if we switch it vice versa, if you're in a long position and it's failing to break a supply zone or it's failing to break a high, then most likely your position is invalid. So what you can do then is either move it to break even, like I do, or you can take some key partials at areas that price should reverse from. I find having an exit strategy is very, very important, and not a lot of people focus on that. They just focus on the entry and then that's it. But I'm telling you, having an exit strategy is going to help mitigate risk so much. And by not acting with FOMO, waiting for the liquidity sweeps, and then adding that exit strategy or risk management plan to your trading, I promise you, you're going to see less losses. And as a result, less losses are going to set you up for the highest probable trades that will hopefully end up in your favor. So what do I say at the end of every single video, guys? Let's be 1% better every single day. I appreciate you all so much. Seriously, thank you so much. If you could, drop a like, comment, and subscribe on this video as it helps the channel. We're almost at 40,000 subscribers, which is just absolutely insane. I just want to say thank you so much. And without further ado, I will see you all on Wednesday. Let's have a fantastic trading week. Take care, everyone.